Hi, and welcome to the Road to Wealth. I'm glad you're here, and I hope this video brings to you some information that you can use and put into practical use. Now, a lot has been going on in the U.S. in recent months, and a lot of what has been going on are the kind of events that, at the very least, cause a lot of volatility in the stock market. And we have seen just that. As a matter of fact, the stock market had been on a tear. It had been on an 11-year rally for the most part. And when the pandemic hit the U.S., especially starting about March, the market was impacted greatly, mainly because of the uncertainty. The pandemic, the coronavirus, is a novel virus, so it had never been in the wild, to use that expression. We had another SARS virus with some similarities in the past that doctors and scientists were confronted with. But this is technically a novel virus or new virus. And so the market reacted as you would expect with volatility because there were so many uncertainties. And one thing the stock market does not like is uncertainty. There's a lot of psychology in the stock market. As a matter of fact, psychology may be one of the greatest forces in the stock market to determine what you can expect in terms of its movement and the direction of that movement. And when you have what is commonly referred to as a black swan event, when you have an event like this pandemic, which comes along with so much uncertainty that people cannot predict what may come of the future, then you can expect the market to react. And that reaction can be adverse and include a lot of volatility when this uncertainty is introduced into the equation, which of course it has. Now, what we have also seen during the course of this pandemic, during March, April, May, June, July, and this video is being recorded in early August, is that there are some sectors of the market that have been very hard hit. And there have been some sectors of the market that have actually benefited because of the circumstances surrounding this pandemic. Now, it's no mystery to anyone what those sectors are, but just to highlight them a little bit, the travel and leisure sectors in particular have been most hard hit. A lot fewer people are flying or risking flights. Much of the business travel has been replaced through video conference calls and other methods that allow meetings to take place without meeting in person. As a consequence of that, people are not buying as many dress clothes, so the clothing industry has been impacted. Because of that, not as many people are having their dress clothes cleaned, so the dry cleaning business has been impacted as a result. So you can see there's this cascading effect where different industries that you would never dream of even 7 months ago that might be impacted negatively have been impacted because of this. Technology, on the other hand, and companies that enable technologies that allow for online virtual meetings or virtual online entertainment sources, and even things like telemedicine have enjoyed big increases in their stock prices as people have flocked to those areas. And most of the companies that are in those technological areas have seen significant increases in use, revenues, and profits. And as a result, the market has rewarded them, and a lot of people have shifted their equity investments away from some of these losing sectors into some of these winning sectors. Now, one thing I should tell you about investment videos that you'll find on YouTube, and in some cases even videos about personal finance, is that you really have to take any specific investment recommendations with a grain of salt. I have reviewed the backgrounds of many very popular channels, and the people that are often making specific stock recommendations have no background or no formal education or formal training, or who have never passed any kind of qualifying exam in the securities industry to be making those recommendations. Sometimes the reasoning is good. Sometimes the content creator comes up with a rational reason for the recommendation, but I can tell you, as someone who spent 26 years in the financial service business and who was a principal for many years and who has gone through many qualifying exams and training classes beyond even what I can remember now, I would not come on here and make specific recommendations. I would say, in general terms, that you can look at some general trends and look ahead at what are some trends that may stick around. Not only as a result of this pandemic still possibly going on for at least several more months, but looking at offshoots or trends in companies that make technologies that have gained more acceptance in recent months, where the technology may be adopted beyond the pandemic. And I believe these areas present some really great investment opportunities. Now, it's very interesting that a lot of you out there who are millennials and younger investors in the generations behind the millennials have jumped into some of the stocks that have been most beat up by the pandemic, knowing that you have a longer time horizon or timeline before retirement, or maybe needing the money for other reasons in the future, and considering the cyclical nature of the markets, and the fact that some of these markets, like the airlines or the cruise ships, will eventually rebound once a vaccine is in wide use, and maybe once also some therapeutic drugs are proven. So taking those risks may turn out to be a calculated risk. I think some of those have already shown some upward movement even recently. Now, of course, a lot of that will be just because of people getting into these stocks and bidding their prices up. There's an old saying that the market generally values stock at what the market values it at. You know, you can find that a company is worthy of a high stock price if investors and institutional investors see real value in that stock. And it certainly helps if the book value supports it, if the evaluations are not overblown. These things, both from a fundamental analysis and in some cases from a technical analysis, would support some great stocks. So the message is, do your own research. The market is always forward-looking, so look forward yourself to what sectors of the economy may not only continue to benefit from this pandemic and the fact that we could see a vaccine by the end of the year, but it's more likely that it may be the second or third quarter of 2021. So I would look forward to, if I were you, and look at the companies that will benefit by the circumstances we are in, and then the companies that may be the benefactors of trends that are a fallout of the current circumstances, and those may be your best stock choices. The market has been surprisingly buoyant considering what we've been going through, and any new news about the hope for a vaccine or any positive news has certainly been reflected in some of the updates we've seen. So stick with this channel. I will try to give you my insights on not only the stock market and investing, but personal finance, reducing debt, increasing your FICO score, and just in general making good, sound money management decisions to grow your wealth. If you like this video, please hit the like button and subscribe, and hit the notifications so you won't miss a single video.